lots of news on the mortgage front as well. I know that the presidential election always has some volatility in the stock and financial markets,
Sure.
and it's kind of a polarizing topic. I'm speaking on AM Tampa Bay on 970 Wednesday morning with Jack and Ted about this, and kind of the concern and causation that can happen from the presidential election and what its impact is on real estate. I think one of those impacts is potentially interest rates, depending on economic policies and all that. What are you seeing or feeling on the interest rate front as we kind of head towards the election?
Well, it's funny because, I mean, for literally years, we've felt like interest rates were at that point where they
had to go up.
They had to go
we've
up.
been saying they gotta go up. But then you've got countries around the world that are paying people, or not paying people, charging people,
to save their money.
Yeah,
and
so never know.
It's really a global economic thing that, when the levers get pulled from different places, that affects what our policymakers do on this side. So, without a crystal ball, again, I mean, I'm still on, and every economist is still on the side of saying, yes, rates are going to go up, and we see the ebbs and flows constantly over, over time. I mean, every once in a while, just like earlier last week, we had a bump where the stock market dropped 400 points, and usually the stock market and the bond market go in opposite directions. Well, they went in the same direction. They both dropped, which means that rates went a little bit higher, and so those kind of things, they seem to have leveled themselves off. And so still rates have remained low, but the writing's on the wall. I mean, they can't go much lower, and every economist, every prognosticator is saying, expect them to go up very soon. I mean, we just don't know exactly when.
That's certainly the concern I think a lot of people have with prices continuing to rise in Tampa Bay, and a lot of neighborhoods getting unaffordable. I mean, a couple of examples this week that we had. We had a home in Seminole Heights, for example, that we listed at $200,000. And it went under contract for more than 30% above the asking price. It had so many offers. I mean, it was insane. And the reality is, in a lot of these situations, and certainly you just never know, but in a lot of these situations, the price gets unsupportable by appraisal. Right. This, fortunately, is a cash, no appraisal, buyer, so we don't have that worry. But the reality is that in a lot of neighborhoods, we're sensing that. So prices are just getting driven up above market. You've got, and above, in a lot of situations above supportable appraisal value. And then you have, economic concerns. You've got the election that's polarizing, and you've got a push on interest rates. So if prices keep rising and interest rates keep rising, the inevitable. I mean, there was an article in the paper this week, and I think it's important to touch on it. The inevitable downturn, it happens, right? We know real estate goes up, it goes down. And we've had a great long run of values going up and sales continuing to go up, but it's starting to show some signs. We're starting to see, I see some statistics out of Sarasota, for example. We opened our office there in January, and it's a great market for us. We're doing really well. But, you're starting to see some median and average sale prices decreasing year over year in some areas, and in Tampa as well, in some of the higher end price points. You're seeing that list to sell price ratio and inventory increasing a little bit. Everyone looks at the average statistics, which are, incorporating homes like the 200,000 price range where everything flies. When you start incorporating some of the higher end stuff, the market is already starting to show some signs of softening and stabilizing in some areas. And it won't be long before, the turn goes the other direction. And I think that's why a lot of smart buyers are taking action, because they know that in a couple of years it may be in a completely different place.
Yeah, and the reason for that is when rates increase, all of a sudden your purchasing power for individuals drops dramatically. So right now, $1,000 an increase in price, or loan amount for that matter, really only raises your payment about $5 a month.
Right.
But when your rates jump up, now all of a sudden, if you can afford a $300,000 house today, that might be $225,000.
And I can't tell you how often buyers pay attention more to the price of the home than the rate. I mean, we've seen people haggle over a couple $1,000s in price, only to have their rate go up a quarter of a point during the negotiation.
While waiting for it.
While waiting for $1,000 savings and haggling over the price, they're going to pay more than that $1,000 in payment. And the interest rate is so important. If you've got a great rate, don't haggle over small. If you have a great rate and you can lock it, do not haggle over small little nitpicky things, because it can come back to getting greedy. Can come back and bite you.
In this market especially, I mean, you just said that in Seminole Heights, I mean, multiple offers. I mean, every home seemingly that we're seeing, again, not talking about the luxury home market, But in the
normal price ranges,
normal price ranges,
yeah, I would say the
conforming
conventional,
will-
yeah, the 400s and down. Even in some neighborhoods of South Tampa, in some parts of town where you can climb up into the 6s or 7s for that to be kind of the average or median for that area. But when we talk $1 million plus, or in some parts of town, 500 is a high price point.
In certain parts, right?
We're such a big market that it varies from neighborhood to neighborhood. But what we're seeing is in that kind of core where most of the sales happen, the market is still really healthy. But it's starting to, like I said, it's starting to take some turns. Markets like Sarasota and Bradenton that are second home markets, a lot of times are the ones that get hit first, or the parts of Tampa Bay that are second home markets like the beaches. Those types of things are the ones that start to feel the bite a little bit earlier than everybody else, because people still have people are still moving and need a place to live, whereas the second homes and the vacation homes and all that that starts to get cut out. So there's definitely a lot of concern as we come up on the election. I know that it's polarizing. I know that a lot of people want to fence sit and wait till after the election, but in a lot of circumstances, it's not the right move, because it could make it harder on you if prices do continue to rise. Eventually, will they drop? Yes. I mean, we know this. Is it going to happen next week? Is it going to happen?
And is it
going to
gonna be
in 2 months
catastrophic?
right after the
Probably
election?
not, right?
Correct. It won't be anything like the last time. It will be, in my opinion, based on all the data we look at, it's not going to be nearly as bad. So